Welcome to the Economic Times Digital Payments Forum. Partnered with Mastercard, this initiative looks at how digitization and innovation will open the payments industry to new opportunities and push the country's financial inclusion drive. Thank you for joining us. Please extend a warm welcome to our eminent panel.
Hello and welcome to today's panel discussion on small businesses in India, brought to you by the Economic Times and by Mastercard. This is the second panel in a series of 4 that we will bring to you. I am Alokesh Bhattacharyya, Senior Editor with the Economic Times, and I am joined by my colleague, Suchetana.
Hello everyone, I'm Suchetana Ray, Senior Assistant Editor with the Economic Times. Welcome to today's discussion. The topic for today is the Fintech solution to small business credit woes. We will deliberate on the payments and credit challenges facing small businesses and how these challenges can be overcome.
First, let's do a round of introductions. We have with us today on the panel Mr. Subhash Chandra Garg, the former Economic Affairs Secretary and former Finance Secretary of the Government of India. Sundeep Mohindru, CEO of M1 Exchange. Nitish, Asthana, President and COO of Fine Labs.
We also have with us Kalpana, Balasubramanian, CEO and Chief Thinker, Thornton, dGTL, Anil, Bhardwaj, Secretary General, Federation of Indian Micro and Small and Medium Enterprises, FISME, and Rajeev Kumar, Senior Vice President, Market Development South Asia, Mastercard.
Thank you all, Kalpana and the gentlemen, for coming today to our panel. And thank you, Suchetana, you're also the other lady. And we are looking forward to a really great discussion here today. Let me start on a slightly offbeat note with some words from a famous song by Swedish pop group ABBA, which used to rule the roost earlier on. Some of you may have heard of it. There's this song that says, "Money, money, money must be funny in the rich man's world. Money, 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 always sunny in the rich man's world. All the things I could do if I had a little money. It's a rich man's world."
Interesting you to start the session, Alokesh. That I really would like you to sing it. Would you want to sing it also? I thought you would start off with a tune sometime. No?
I think a lot of people are already humming it. So let's move ahead.
You know, the poem actually nicely highlights the core of the challenges that small businesses in India face. They are forever struggling for money, for credit, and even working capital. Banks, as we know, are wary of lending to them because collateral is an issue. And their customers delay payments while they need to pay their own suppliers on time every time.
Let's take the auto sector, for example. There are thousands of very, very small component suppliers in the automobile industry. Now, a recent report by EY, which with 12-month trading data till September 2020, says that large auto companies delayed payments to their vendors, and tier 1 vendors further delayed payments to tier 2 and tier 3 vendors so that they could improve their own cash flows.
It's not bad to keep an eagle eye on one's cash flow, but should it be at the cost of the small supplier? An important question. With COVID-19 returning with a vengeance and Maharashtra, India's biggest state economy, going into lockdown for 15 days, the fear is palpable for SMBs taking an unsustainable financial beating, and it is very much real. This fear is very much real. But there is perhaps a very small silver lining.
And that silver lining is in the latest RBI data for credit offtake of 33 scheduled commercial banks, which RBI puts out on a monthly basis. Right, these 33 banks account for about 90% of the total non-food credit that's deployed by banks in India. This data of February shows that credit given to micro and small industries has grown 1.5% in February 2021 compared to February 2020. But for the fiscal till February, credit to micro and small companies contracted 1.3%, but that was far lower compared to the credit to large companies, which contracted 5.7%. But interestingly, credit to mid-sized companies, which is also a component in the MSME, right? The credit to mid-sized companies has grown 23% compared to just 1% growth last fiscal.
course, MSMEs take loans not only from banks, but also from MUFCs, PE, VC firms, and microfinance institutions. And now there are fintech firms in the mix as well. Fintech companies have created multiple lending models and very interesting models at that, such as peer-to-peer lending, crowdsourcing, and invoice discounting. They also have digital models to scan through past payment and cash flow history of small companies to lend without collateral. These are exciting models at play, and more innovation is happening with each passing day.
Right. But for all these models to reach full potential, SMEs must also take full advantage of the digital revolution in a big way. And to get a deeper understanding of the ground realities, let's spend the next 5 minutes with Kalpana Balasubramanian of Grant Thornton Digital. Kalpana, over to you.
Thank you. Thank you all for having me here today. My name's Kalpana and I head Grant Thornton Digital. And I'd like to think that, that I've been involved in looking at fintechs and startups for more than about 10 years now. And I'm based in Bangalore. If you look at SMBs and looking at setting the context, essentially, you need to manage money, which is your own internal money, plus also, providing, say, for the people who work for you, and looking at managing customer experience, and also looking at managing, say, regulation overall. More importantly, from all these angles, I think it's extraordinarily, critical that you're able to understand and skill basically what are all the available options to you across, board, from a point of view of both managing of money and of experience, and looking at making sure that regulation is managed. So if you look at managing money, I think Suchetana was saying quite aptly just a bit back that there are various segments of microfinance, co-lending model, invoice discounting, etc. If you look at, for example, Mastercard, they've actually set up a global SME fund, and they're looking at how they can work with different organizations like, say, CII to make money available with speed and with the accessibility that you need from your business dynamic perspective. If you then look at Threads, and MI Exchange is probably one of the best examples, and you would have direct first-hand information in a bit. Invoice discounting is again another medium where we are seeing maximum gain from a SMB sector, essentially to manage at least working capital and looking at how to enable free flow of transactions both up the chain and down the chain as well. If you then look at managing customer experience, we wouldn't have got past COVID. We were just discussing a bit back without maybe accessibility of digital channels, such as just ordering online or looking at maybe, just making payment quite seamless from a point of view of maybe any of the businesses on how you manage both the external customers, whether you're doing B2B2C or B2B as well. You then have the convenience and the customization angle. How can you use fintechs, say, for making things very ultra convenient for your end customer, to probably looking at frugal innovation for maybe hyper personalization for your specific B2B customer, for example. You have various sources of regulation operating at SMB and looking at maybe the whole fintech space, and possibly, we are expecting that there will be quite a few advanced regulations coming up in maybe crowdfunding, looking at peer-to-peer lending, and looking at account aggregator frameworks, which involve both banks and fintechs in one transaction. So over to you back, Suchetana, and I'm looking forward to hearing from the different panelists on how maybe they are seeing this whole space develop and how fintechs can help SMBs do business much faster, better, and cheaper. Thank you.
Thank you so much, Kalpana, for that very crisp and nice context setting. As you said, the areas that make up the ecosystem of the world of SMBs, managing money, managing customer experience, and managing regulation, we will see how especially SMBs are dealing with when it comes to managing payments, which comes under managing money, and managing their credit woes. So let's dive into the discussion right away. I'll begin with the first question, and I'll begin with a question on so that I can take in a broader view on the payments landscape for MSMEs. I'll begin with Mr. Garg. Sir, the government has in recent times launched a slew of initiatives to alleviate the financial stress that the MSME sector has been facing. We know the past many years have been extremely tough on them, beginning from demonetization. So give us an understanding of how government intervention and technology can further help MSMEs manage their payments, both inward and outward, better.
Thank you very much. I think this SME space is a very large and very amorphous kind of space. There are about 8 crore SMEs in the country, MSMEs in the country. That's a very large space. About 1 crore of them do some sort of manufacturing, construction, and other kind of things. About 3 to 4 crores are simply traders, shopkeepers, and other service providers in that sense. And then there is a last space, which are virtually street vendors, very small, and that is the kind of sort of heterogeneous space which we have in the SMEs. With the banks also, not more than about 1 crore of businesses are linked. You would recall when the government last time came up with this emergency credit lending facility, what the government said that the banks would provide about 20% additional credit to MSMEs, and there are about 45 lakh such accounts to whom the services would be, or the credit would be provided. A little while ago, the data which Alokesh was reading out also confirmed that that is the space which grew maximum by about 23% in terms of credit, and everywhere else the credit was actually going down. So this big space, and the COVID did very, very bad sort of impact on these. Incidentally, something like 6 to 6.5 lakh crore, or 6.5 crore of these enterprises are virtually single account or single person enterprises. They don't have. So the COVID lockdown did them a very bad deal. Almost 60-70% of them suffered, their business shuttered, which was reflected also in the labor getting sort of unemployed, and our unemployment rate shooting up to 30 to 35%. That was the kind of horrible scenario. In this, the government did try to come up with some solutions. They approached it from the individual or household sort of stress alleviation. Recall that ration scheme where the wheat and the pulses was provided free of cost. Some amount of assistance was given in the Jan Dhan account and all. But unfortunately, because the fact that these SME space is so disorganized, you don't have data, you don't know how many. Even the Udyog Aadhaar numbers which are assigned is to about 1.25 crore SMEs. The bulk of the SMEs are not there. So that absence of the databases made the government not really provide any meaningful interventions to the SMEs, and they remained, I think, distressed. This time we heard Nirmala Sitharaman saying yesterday that they will come up with something for the SMEs, but I think it was not a really, really big relief for the SMEs. I'll stop it at this stage. Thank you.
Thank you, Mr. Garg. In fact, I'll come to Mr. Bhardwaj, since you represent the SMEs, and on this panel, you are the sort of the insider, right, in terms of being a voice of the SME. And in fact, if you look at the RBI data in the priority sector lending, the medium-sized enterprises have got higher credit to the tune of 48.5%, which is quite a bit. But the higher rates, 23% in the industry sector and 48% in priority sector, these are all mostly the medium-sized enterprises. What about the really small, the ones that Mr. Garg was talking about? What are the credit and the payment challenges that they are facing? You can tell us firsthand, Mr. Bhardwaj, better than probably anybody can.
Thank you, first of all, for giving me this opportunity to share what I have, what little I know about the MSME sector. See, first of all, as Garg Sahab was saying, that this sector is highly heterogeneous, and although we use the term MSME as a single entity, but within them, what we say micro is essentially under the carpet. We have very little idea about what kind of enterprises are they. Little bit of information that we have is based on the 6th economic census, which pegged them at 6 crore and average employment less than 2. So essentially, we are talking about people who are self-employed, working from home, in 1/3 of the cases, and 1/3 of the cases outside, but without any permanent structure. So barely approximately 40% or so of the 6 crore have permanent structures, at least some shanty to work under. So when we are talking about loans to them, their needs are very different. So they need small amount of money, which banks find it difficult to process. These are own account enterprises, as I said. But when it comes to small and medium, which are more structured, which have a permanent structure, most of them might be operating from at least authorized areas, which is first requirement for the banks to process loans, because they would be asking that, okay, show us the paper of the property where you'll be working, or the lease agreement or something. So with micro, the challenges are very, very different. And fintech can definitely be of great assistance there, because it does not require to that extent verification of where from you are operating, but it is using information as collateral like Aadhaar number. So it doesn't matter where you go and where you are working. We can get hold of you if you have a mobile number and if you have the Aadhaar number. And small loans, 25,000 rupees and less, or 50,000 rupees and less, could be processed without much of difficulty. Now, coming to small, the challenges are different. That are related to, for example, I would say that the credit gap in the small and medium enterprises is large. And if you put a question why, there are 4 reasons. First of all, they have fewer assets to use for collaterals. Everybody knows that. Second, they have less stable sources of revenue. Medium enterprises have little greater stability. That's why it is comparatively easiest for them to get credit in comparison to small. Third, they have problem of liquidity. Fourth, there are information asymmetries, of course. And when we say information asymmetries, where fintech can be of great assistance in connecting the dots and collating the information and processing them and using the artificial intelligence and putting them together in a manner through algorithms that can allow you to take bets on micro and small and medium enterprises. But the information asymmetry actually is about, or it is because information is not codified as per the requirement of the banking sector. And that's what I'm saying, that there are several data points that are spread together. And for example, there is MSME Uddam data, there is GST data, there is CIBIL, there is TRADS. There are other useful data sets like association membership, but we have not been able to make them talk to each other through the algorithm to make sense of this MSME world.
Okay, I'll come to Rajeev from there. Mr. Bhardwaj has been essentially talking about the disorganized nature of the MSMEs and how the data that has been collected, be it from GST or from TRADS, continue to remain in silos with the proper usage. How do you see the payments landscape evolving for SMBs? How is Mastercard helping them? How are you using these data sets which continue to be in silos and perhaps not being best used for better and more targeted subsidies to them or targeted solutions to them?
Thanks, Suchetana. The numbers with regard to MSMEs range from anywhere between 6.3 million to 8 million, as Mr. Garg just mentioned, and the backbone of India. and contributing 35% to our GDP. We believe 20 to 25 million of these 6.3 to 8 million MSMEs are retail consumer focused entities. And they need some form of digitization to reduce cash in the ecosystem and build verifiable track record that can help them in securing credit and other services. This is the key. And let's see what we as a system have done in the last 5 years, and especially Mastercard. Flash 2017, we had less than 3 million acceptance locations in India. For a country our size and a population of 6.3 to 8 million MSMEs, we had just 3 million merchants, which has been acquired over a period of 3 decades. Very, very small, one of the lowest acceptance penetration countries anywhere globally. And most of these 3 million were in places, primarily metros and large format retail outlets, hardly any MSMEs. And none of the acquiring banks wanted to onboard MSMEs because of the cost and the process-driven, painful, ecosystem that existed around that time. Demonetization came, and this changed the whole thing, and acceptance space changed forever. With no cash, most of the MSMEs and merchants who are averse to accepting digital payments were forced to get into this space, whether they liked it or not. Fast forward 2021. Today, we have 8.5 million merchants who accept digital payments, and most of it coming from tier 2 to tier 8 locations, and mostly driven by fintechs. And I'll explain as to where and why the growth from a 3 million to a 8.5 million, almost a 3 times growth. This has been enabled by what we call payment facilitators. These are fintechs who partner with acquiring banks and go about acquiring merchants on behalf of the acquiring banks because they cannot acquire merchants directly. We have today 60 plus payment facilitators in India, and they acquire in the last 4 years over 70% of the merchants, and 70% of those are MSMEs. That is the beauty about what has happened in the last 4 to 5 years. And to enable this ecosystem and to address all the problems that we have in the acceptance ecosystem to digitize, we partnered with a number of fintechs. One of them is a company called SignZ. This is a company which is focused on eKYC and video KYC. And with them, we have brought down the speed of merchant onboarding from 7 to 15 days to less than 30 minutes. And anywhere in India. So one example of what we're doing with a company like SignZ, with partners like Worldline and Pine Labs, last year, very appropriately timed, we launched a solution called SoftPOS, or what we call tap on phone. This is a solution which is mobile first and mobile only acceptance solution, which converts the merchant's smartphone into an acceptance device. What does it mean? It does away with hardware costs, and there is no deployment, and the merchant through internet can download a Pine Labs SoftPOS app and can start accepting digital payments. And this is the journey we have seen in the last 4 years, where we are absolutely focused with partners like Pine Labs and others, where we are bringing down the cost of hardware constantly and the speed of deployment. And that's yielding results for all of us. We also invested in Pine Labs, for instance, last year, because they're leaders in a solution called BNPL, Buy Now, Pay Later. And as we've all seen every day in the newspapers, you see all the brown and white codes. Nobody advertises the full price of that good, actually. It's all in EMIs. Thanks to solutions that partners like of ours, like Pine Labs, deploy at all these places, a consumer can go and simply using a card or any other method is able to buy things on easy installments. Again, that is helping small and medium enterprises who are focused on white and brown goods to get into fintech-led solutions like BNPL. We also partnered with partners like Razorpay and InstaMojo, who are focused on enabling merchants online. What we have seen is India is a very vast country. There are MSMEs spread nook and corner of the country, and they need solutions. They can't get that solution from the neighborhood bank. So they rely on partners like Razorpay and InstaMojo to become a merchant in less than 10 minutes and start accepting payments. And all these partners of ours, they not only provide digitization, they also provide value-added services, including lending to the MSMEs. So in short, we have partnered with a number of fintechs wherever we needed help and support in enabling MSMEs. And our aim in the next 2 to 3 years is to reach at least another 10 to 12 million MSMEs and make India the largest acceptance market globally, overtaking USA, which is at around 12 million merchants.
Thanks, Rajeev. That's a really interesting and rather positive outlook, and we are hopeful that things will work out the way you're saying. And since Pine Labs is here, Nitish, the question here is, like Rajeev was saying about the partnerships between Mastercard and Pine Labs, and you as a company also have several partnerships going, right, to enable lending to SMEs. Apart from the retail POS, right, that you have, which I can see everywhere these days, right? Congrats to you for that, right? A lot of Pine Labs POS seen everywhere. But tell us a little bit more about, how a company like yours can help SMBs with their payments and with their credit hassles. How can you, get them to get access to cheaper credit, including working capital? I know that you're working on several different, products and models. You could tell us a little bit about, so that our audience comprising SMEs, they can learn from you.
Thanks for that, Alokesh, and thanks for having me on the show. I think that Mr. Garg talked about, the challenges from a macroeconomic perspective, more particularly around what we've seen in the last year. And Anil ji did speak about, that, not all SMEs are the same. As you go down the chain, you got different challenges as you go from medium to small to micro, right? Rajeev talked about the fact that, digitization is key, but, if you were to connect the dots from where we sit as Pine Labs, I think the silver lining in the last 3 years is, for all the good reasons or not so good reasons, I think digitization of SMBs has become a reality, right? And then what we have seen in our business is that our rate of getting merchants on board to accept digital payments to start with and then do other tools from us as well has literally doubled between February of last year to February of this year. And why is it happening? It's happening obviously because of consumer demand. And secondly, it's happening because there is a generational shift. And if any small merchant was sitting on the fence saying that I will only deal in cash, I think that resistance is gone. Why is that important from a lending perspective and fintechs? Is that I think the first gate, if you were to complement the data that the banks have for lending, is for you to digitize the store itself. I think that is the first step, which kind of creates a gateway to using that information. As Anil rightly mentioned, how do you use information that fintechs have to generate more complementary data to what banks have? And if you see, the biggest issue with the way that lending happens right now is that the financial books do not give the right picture of why a small business needs credit, which is generally for what is called flows and not growth, right? Working capital is all about receivables and payables. So just looking at financial statements will not give you the answer for a small business. And so rejection rates are very high. So the way that we look at lending and the cusp between digital payments and lending is to say that, first of all, fintechs, it could be a food tech company or it could be Pine Labs. We've got data which give us very, very strong insights into the way that the business works, the frequency of transactions, the kind of risks that we see, geolocation, GST related data, and then if you combine it with information that is with lenders, there is a whole opportunity of treating that data and actually complementing the baseline data that banks use for lending. So that's number one. I think second thing with Anil mentioned very rightly is that SMEs are looking for smaller ticket loans and shorter tenure loans. And there is a mismatch between the supply and the demand for when it comes to working capital credit, right? So the way that we are looking at it is, can we deliver products which are shorter tenure, very, very contextual to the payment system, and are actually repayable at source. So not every merchant has got a 30-day cycle of working capital. So just doing an equated monthly installment may not be the right way of doing it, right? So our products that we are stitching together are anything between 5 days to 90 days of credit, right? Which kind of gives them linkage to the payments that they do with us. And they are renewable lines, and they are shorter tenure, and therefore they're short, lower ticket as well. And the third piece is that we are making it very contextual to the payment system, which means that the registration, the administration of the loan, the repayments is all managed, should be managed on our platform, which basically means that as the merchant is collecting payments on our POS, the repayment is actually structured as an equated daily installment rather than an equated monthly installment. So look, our worldview is that, I don't think that fintechs will be able to solve the whole pieces of the puzzle. It's really important for people like us, fintechs, as well as networks, to come together with banks and actually create a complementary model where you get the best in terms of cost of capital, which obviously banks have the best cost of capital. So you need to leverage that. And you're able to kind of create a scoring mechanism which is based on the information that we have outside of the financial statements, and then make it contextual. That is the way we're thinking. Of course, everybody's in kind of the start of a journey, and we can talk about OCEN and what is envisaged from an OCEN framework perspective, but that seems to be probably the best way to go forward. Can OCEN become the UPI of credit in a sense?
As you mentioned, banks with their risk management, with their years and decades of risk management, bring in that stability, while fintechs bring in the innovation and the pace and the agility that is required. I'll come to Sundeep with that. You mentioned that M1 Exchange has taken big strides, and today MSMEs from 612 cities access M1 Exchange online. Give us a sense of this growth story and the challenges that still remain.
Sure. Thank you. Thanks for hosting this and inviting us. Like the other esteemed panelists have suggested, cash flow based lending, fintechs playing a role, more so digital, all these combinations put together have been applied in TREDS, which is M1. And just to give you some background in terms of growth and the adaptability, 17-18 flashback, like Rajeev suggested, we used to go to a bank and bank used to say, "Ye nahi chalega." Digital discounting. All this will fail. You are putting your money in the drain, etc., etc. And today in 2020, we have 35 banks who bid for business. For the first time in the country, there are banks bidding to discount the invoice. And this bidding happens online. And within minutes, the invoice is bidded and selected for the best bid, and the payment gets transferred electronically. Nobody moves out of the house, or there's no courier, there is no paperwork. It's a many-to-many, one-time MSME registers, and he gets access to 35 banks. He does business either for Maruti or for Ashok Leyland or for Hyundai. He doesn't have to sign loan agreement multiple times. One-time registration, one-time KYC, and the whole world is open for him to do the business in terms of his receivables discounting. Now, these are the good things. Before Corona, people were accessing it from about 350 cities in India digitally. I never used to think that people from C cities, tier 3, tier 4 cities will be able to put the invoices using a phone because it's a B2B. And these are small companies, micro companies. they'll be able to put invoices and understand how to get it discounted. But to my surprise, 350 cities. And post-corona, post-first lockdown, today 612 cities, people are logging in. Above 100 cities in India, all are tier 3, tier 4. All, I mean, on an average, I'm just telling you. So imagine people logging in, micro, small enterprises logging in from tier 3, tier 4, 500 cities, Bihar, Assam, down south, everywhere. Having said that, the growth is enormous. I mean, the potential is enormous. Let me put it like this. Trades have done about 36,000 crore worth of invoices discounted. So, and average invoice is between 4 lakhs, 10 lakhs. So imagine the volume of invoices that have been discounted. What have not been discounted is all PSU business. What have been discounted, 97, 98% is private corporate business. So the change that is required is in the culture and the attitude of the PSU enterprises for them to enable SME to take the benefit of this. Now, the biggest advantage that the SME has got is the right pricing. See, what happens is when you go for unsecured lending, when you go for cash flow based lending, the first antenna that a bank or an NBFC comes up with is 15%, 18% rate of interest, or maybe higher. That's the kind of charge that I will take because this is unsecured. Now here, the SME is getting discounting at 4% per annum. Now this is a savings bank rate, or 6% per annum, or the average is ranging between 5 to 8% per annum, which is never heard of. This is unsecured. Okay. Why? Because the bank is taking a risk call on the customer of the SME, not on SME. No balance sheet is required of the SME. No default or any character is required of the SME. We don't check if he has paid his installments on time or not paid his installments on time. We just see the genuinity of the invoice, whether the goods have been delivered or not, whether the purchase order is valid or not, whether the buyer of the goods, which is a large corporate, has accepted the quality or not. If he has accepted, he gets his payment next day morning, 8 a.m. and at the rate of interest, which is lower than his own working capital rate. So the right pricing is the key, and therefore we are making the whole business very competitive, because his cost comes down, his customer's cost come down. He starts billing at a lower cost to the large customer. So that is the difference that Trades is making to the community. Having said that, as I said, this is all happening in the private sector world. Very limited is happening in the PSU sector world, though government is taking out mandates on the PSUs that you have to approve your invoices on time. They should be approved online, but limited movement has happened on that side. Just to make a point, what other co-panelists have said is cash flow based lending. I must tell you that we deal with all the banks in India. Banks are the biggest lender. After that comes the NBFCs. How many of them are ready for cash flow based lending is very important to be seen. Their education, their internal processes to approve, their mindset to look at an SME from a cash flow based lending is very important. The fintechs are working hard. They are bringing technology. They are bringing business on the bank's table. How much of that business is approved for credit? That percentage is X percentage only. It can go up multi notches. And yes, it is an evolution journey. Banks are worried. They see the cycle. If they get the repayment on time, they get confident to release the next credit. But this is a very slow offtake which is happening versus the speed which the fintechs are maintaining. So the speed between a bank and a fintech is not is multi notches away. And if the banks can be coached, can be groomed for the new way of credit evaluation, then that's the next wave will happen in India. Of course, all the OCANs, all the databases, they are now becoming open. They are available with OTPs, and GST data is available with OTPs, with the GSTIN, and other things are happening. That speed that banks will also pick up in due course, hopefully. That's all from my side.
No, Sundeep, that's very interesting. But what I also wanted to know, PSU's reluctance is quite well known, and hopefully they will get over that reluctance soon enough. What I also wanted to ask, quick check you. When you say interest rate, basically means that if I have put out an invoice in which I'm expected to, in which my original billing was 100 rupees, and I take a 5% hit, means that I get 95 rupees instead of 100, isn't it? Is that correct?
Yes, Alokesh. So that if you are getting discounting rate at, let's say, 5% per annum, normally it's a short-term instrument, like 60 days के लिए discounting होता है. So the data calculation will be done on 5% for 60 days, and it will come in few hundreds. So for an MSME or any enterprise, it will not even make a difference because you are passing on the risk.
But don't you think that it's going to hurt their margins, because MSMEs, especially the smaller ones, have very low margins to play with? Even a 5% to 7% might make a major difference. Are they going to then inflate their prices so that they can manage it?
A very, very common question which comes 100 times. Now, let me tell you, when an SME borrows money from a bank, which is a secured lending, average rate is 10%, 12% per annum, right? Yeah. When he's borrowing from outside the bank, average rate is 15%, 18% per annum. Now, his collection is due from a customer which will come after 60 days, say for example. Yeah. Now, that 60 days period, he will be using his loan or fund from a working capital bank or an outside bank, which will be at 12% or 18%. Now you are making available that money immediately to him at 5-6% per annum. So even if he doesn't need that money, he should take that money and put it into his working capital bank and save the cost. So it's rather a saving for him than spending extra.
Can I join this?
Yes, sure.
See, by shifting the credit risk from the SME to the well-known established purchaser, everybody in the system gains, right? Imagine the normal way would be for that industry to pay to the SME, or the SME to wait for 2 months to realize his bills. These are the two normal models in which the things work. If the banks were to lend to this established industry, the rate at which they will lend would be lower than the rate at which they are lending to in this case. So the banks is gaining. SME, if it has borrowed on its own credit risk from the bank, as Sundeep was saying, that it would have cost him 8, 9, 10%. So he is borrowing at virtually half the rate. And the established buyer is actually saving on the interest rate which he would have paid. So I think everybody gains in the system. This beauty of the entire transaction is that you shift the credit risk from somebody who is considered to be a credit poor to somebody who is. That is the advantage which the fintech, by processing the data, putting it together, shifting the risk, who is the best bear to in the best position to bear, brings. That is what I think the value addition is the fintech's bring.
Bhardwaj, is that what happens if, because SMEs are very averse to sort of making their large customers sort of unhappy with them, right? So several times we have heard reports that large companies have actually told the small companies that I'm giving you this bill, but you can't put it upon threads.
Absolutely. Right? So the problem is not that MSMEs are not interested. The problem is that the power equation is such that a large company can still dictate terms. And that's why you needed a diktat from the government that anybody who's having a turnover of more than 500 crore rupees will have to mandatorily register. I mean, then the corporate sector, I think, Alokesh ji, you said it in the beginning or somebody else, one of the panelists, that unfortunately the situation in India is that, most of the large corporate sector are getting financed through the MSMEs. So basically they are using their capital, MSMEs working capital, and making use of they are not taking working capital from the bank. Rather, they are using the working capital of the MSMEs to run their businesses. And in the interviews of the CFOs, you would ask, the first question is that how much money you can borrow from the market through the system. So the idea is how much you can squeeze the supplier. So whosoever the CFO can squeeze it better is considered the A-rate CFO. That's the given status. It is not MSMEs they are definitely more interested. They know it, and I think one thing that the COVID has done is that all the apprehensions MSMEs had, at least the organized ones, about digitalization. I mean, those wrong perceptions are gone. They are much more attuned now. So from their side, I assure you there is no problem. We'll have to work, yes, on the front of the buyer, and especially the public sector undertaking. For example, one of the biggest buyers like railways, they are not there. Even the large project managements like Tata projects, they are not there. L&T, they are not there. And they have their own reasons. When we confronted them, why are you not there? So L&T guys would say that, our own payments are not coming in time, and we are not sure when it would come. Most of our projects get stuck because of environmental or other reasons. That's why I think it is there. And secondly, the large corporate sector also worried, and that's a good pressure that ultimately TEDs would be putting them, that once we start putting up the invoices of our suppliers on this, everything becomes visible. So it also puts pressure on them to be more, whether you call it corporate responsibility of paying in time to your suppliers. Currently, everything is hidden. But if you put all these bills online, then everybody would know how quickly, how fast you have been paying your suppliers, how fair you have been to them. So I think it's a mix of both.
In fact, Mr. Bhardwaj, you're absolutely right. Large companies tend to delay payment so that their own cash flows improve. The cash in their system, goes up more. We have to come to Kalpana, but before that, Rajeev has raised his hand. So Rajeev, you make a quick point, and then we'll come here to Kalpana.
Yeah, what Sundeep mentioned is something very, very familiar. So I just wanted to share that with the broader audience. He said the difficulty they had in convincing the banks and then expanding the product and then going to 500 cities where consumers had to use technology to upload their invoices. And I don't think his team went to each and every of these 500 cities to train or teach how to do it. Customers learned it. And I'm hazarding a guess here. I believe the TED solution is all in English, not in multiple languages.
Yes, you're right, Rajeev. It's in normal English, and all we have is a call center operating in 5 languages.
Okay.
Teaching them, hand-holding them in local dialect. But otherwise, teams are only present in 6 cities physically.
Yeah.
And yes, the spread is happening with God's help. It's happening on its own.
Word of mouth. Kalpana, you were asking a question the other day.
Exactly. I was just coming to that. Please go ahead.
Do we need localization or languages, multiple languages to go and address the vast majority in all the states around the country? We have exactly a similar example with one of our fintech partners, with whom we actually come up with what we call a sachet loan, where when a merchant accepted a credit card, the payment typically would come 3 days later. T+2 it is called in the cards world. And we convinced this fintech to offer what we call instant payments. you accept a card instead of getting it 3 days later. We told them, why don't you offer immediate payments and charge something in this? And they didn't believe that there is an opportunity there. And after multiple rounds of discussion, they agreed and they said, okay, we'll test it. It's not a big build. They built it and they tested it. Believe it or not, from the day one they announced it's all a mobile enabled solution where they take online payments, and alongside the card payment, let's say for example, there are 10 payments, out of that 3 are large ones and they want the payment today and not 3 days later. They can click on the side and say, I want this instantly paid, instantly paid, instantly paid. Out of the 10, 3 of them. And within minutes, the money is credited to the bank account at 1% less. And that solution spread so fast, we were all shocked. We didn't believe that customers first would understand. It's all in English, in corners of the country, and people understood, used the solution, and is a super hit actually. So many times we have this feeling that people need to be told in their language, explained in their language. And when we went back to this fintech after the success, I asked him, how do you think this has happened? They said, when it comes to money, people understand every language.
Right. And when it comes to business and I think maximizing your reach and profits, I think they understand every language. That's the language, yeah. I think. Kalpana, I'd like to ask you a question. Let's get into a little more detail about this digital aspect. Data shows that majority of Indian SMBs are still offline. What is at the core of this problem? Lack of skill, lack of understanding of technology, resources, what?
No, I think it's just having maybe some money and that getting pulled in all directions. Whether would you expand the business, would you invest in digital? Is it important to invest in digital? For example, like if you look at things like cloud, you look at infrastructure, I'm not sure whether there is appropriate education to say that, look, here are various mediums in which you can actually go and look at pay-as-you-go models in technology. And I think fintechs play a big role in that because they actually minimize that whole capsule of how you're digesting that investment, whether, you look at working capital financing or, you look at things like maybe probably, aggregate credit management or peer-to-peer lending, everything like what we were discussing earlier, money talks. Like no other language does. And I feel that from probably a SMB's perspective, there are two critical things. One is knowledge of what is digital that is relevant for them. And for example, if you look at Thornton, we've been doing a large initiative called Vibrant Bharat, where we work with multiple SMBs to actually look at seeing how we can turn the needle. We heard earlier how much of GDP SMBs contribute. And if you look at maybe some of the growth sectors, like say, let's take technology, right? I mean, if somebody said like 25 or 30 years back that services sector would reasonably, contribute to GDP, that would have been questionable at that time. Whereas if you look at even 2000 years back, right? No internet, nothing. I think the traders from India were much, much more popular even at that stage. So I have a feeling, that trade is inbuilt in our entire community, maybe deal with each other. It's just the knowledge of how digital becomes another tool in your armory. So one is of course skill training, and I do feel that, look, I'm from Tamil Nadu, and for me English is a second language. And while I appreciate Rajeev saying yes, it is important that that once the knowledge of money is there, whether it's Razorpay or Paytm Mall, people get to know how to use it. But I think from a larger digitization perspective on why do you actually need to do something on a digital medium versus a physical, I think some level of change management can be pushed faster if it is regionalized, in my view. One is knowledge and the second is infrastructure. I think in infrastructure, we are reasonably there because we are all in first tier cities. Like my mom comes from a town called Krishnagiri, and I can tell you that, it's reasonably advanced now versus maybe what I visited in school, but it's still not the same like maybe another town which could be much, much better. Or maybe, you know, we were talking about Hubli and internet connectivity. You know, it's essentially, you know, to say that one is the larger infrastructure play and how does that operate. Second is the, you know, the whole knowledge. And third and most important, if suppose I can stop worrying about how I will manage my working capital through fintechs, maybe then I can take my eyes off business and see how do I improve it, right? Because if I'm doing a hand-to-mouth existence, you know, all of us are on full stomach, we can talk all principles, but essentially, you know, if I need to pay the person the next day and I don't have money for it and I have a responsibility, if somebody can take care of that, then I think I will invest in digital. At least that's what I would think.
Kalpana, I'll come to Mr. Garg with that question. You know, the trouble, as Kalpana has been very brilliantly putting it, is that if you are so consumed with the now, how do you invest in the future? But what are the problems of the now? GST, biggest problem. Regulations, another huge problem. And also you have access to funds, another problem. Is technology not the solution to all of that? So actually, are you looking at investing in the future, or are you using technology in solving your present problems? How can MSMEs be persuaded to look at digital as a way to overcoming their problems?
See, I think, Suchetana, let's believe the MSMEs, especially the micro enterprises. And I'm focusing today deliberately on that because the other segments, to my mind, are getting streamed into and getting mainstreamed into banking and getting credit and all. They do a very tough business. They're into very, very tough business. I think some of us are aware the kind of rates at which they borrow, because they have no access to any formal sector lending from banks or anywhere. I know people, the street vendors who borrow 2,000 rupees and pay 200 rupees as interest or 100 rupees as interest at the end of the day. These are usurious, thousands of percentage of kind of thing, right? But nobody lends to them. That is why they borrow from wherever they can, right? Now, they have no record, they don't have payments, but increasingly now with the digitization taking place, payments becoming digital, increasingly their payments are also becoming digitalized. They have, as was being said in the beginning, they have now their receivables and payables being recorded increasingly. If we can, in the technology industry, bring only the receivables and payables of these into the platform, and that can somebody else, because there is a big business opportunity for an NBFC or otherwise, or now the peer-to-peer lending, and we can actually expand that space, like P, etc., has expanded enormously for big time sort of investment. But for the small time investments, there are not many people enabled to invest into these. Supposing for the kind of example I'm giving, if there is a smart NBFC which sees that instead of this guy borrowing at 2,000% a year, I can even lend at 20% or 30% or 40%, and in the process enable his receivables, payables, etc. to become so that his cash flow based lending can be, then you can put 2 and 2 together and then bring the entire sort of transactions into somebody's space, and he can get credit at much cheaper rate. And the digital system can service him at the end of the day if it requires. The question you raised about the GST and other kind of thing, still the GST is only about 1.4, 1.3 crore enterprises. A lot of others are not, but let us take even those cases. 70, 80 lakhs of them now file their returns and all. The GST system is turning out now enormous amount of data in terms of vouchers and all. The system need to be, and that was one of the major recommendations of that committee, and still not implemented, is that if the GST system opens up the invoices to the digital lenders and the digital fintech companies for sort of taking this bill discounting and other kind of things into businesses, I think things can help. What to my mind is the most essential is, and where the government should invest enormous amount of money and sort of some space, policy space, is to create in the country a system where our SMEs, whom I call unincorporated enterprises. We have companies for which the registrar of companies exist, and enormous amount of data and everything is there. But for the unincorporated enterprises, which are about 8 crores, nothing really gets generated into the system. Why do we in the system not create a system for register them? We have created so much of 100 crore plus Aadhaar numbers, we have all the data, but why can't we create it for 8 crore businesses, the same kind of thing, create an unique Aadhaar number for them, for businesses, organize them as business entities, and then to my mind, the digitalization and the fintech and the digital industry would enormously help to mainstream them and making them credit worthiness as well as investment worthiness. What you were saying, that they would be able to get then some investments which in assets or otherwise, which can help them in setting up and growing their businesses.
That's a lot of good stuff, Mr. Garg. In fact, opening up the GST data for fintech lenders and invoice discounting is a great idea. I don't know why it has not been implemented. I am hoping that it will be implemented soon. And Nitish, Sundeep, you had a point to make?
Suggesting there is a committee from the parliament which has just laid a note wherein GST and integration with the TREDS has been suggested to be made mandatory. So all the SM invoices from the GST will be written by the TREDS and given to the corporate for approval. However, this is these guidelines are still in the making, and if that happens, then it is actually the vision which Mr. Garg is putting forward.
In that, however, lies the problem. It's only at the parliamentary standing committee level, and Mr. Garg will tell you how long it takes for that to translate into.
It's limited to this reluctance is ununderstandable. Why only for trades? There was earlier a suggestion that only for public sector banks, when that 59 minutes kind of scheme opened up, so they did link it with that. Why not open it up for the private enterprises, for the fintech operators and all? I think that's something which need to be sort of argued, worked out with the governments and taken forward.
So, Mr. Garg, actually, GST as a department feels that their objective is to collect tax and not to make available the data. I mean, that's their objective. So that's the objective with which they are set up in the country. And that objective they are fulfilling, and the data is confidential from a data privacy law perspective, from an enterprise. So therefore, they are not able to just openly spread it. And they have to follow their under the parlance at which they are created, they have to follow the data privacy laws. So that's a mental tussle of the GSTIN. And in every
right. Sundeep, I'll stop you right there, because if we go into GST and network, it's going to be another discussion altogether. Alokesh, I think, yeah. Alokesh, you had a question for Nitish.
So, Nitish, if you just give 2 minutes, Mr. Bhardwaj, you had a point to make, just make it quick.
Sure. Actually, Garg sahab raised a very important point, and this question needs to be addressed. The point is that, why people who are self-employed, working from home, approximate number being 6 crore plus, then why we cannot create a system? They could be registered somewhere, they are provided the hard sort of number. And the reason why it is not happening, and all the efforts so far by different governments have failed, is because of the zoning policies in the urban, especially in the urban areas. So what happens is that, you are not allowed to work from home. So working from home or doing business from home is considered unauthorized, illegal. And the moment you register themselves, then there would be a dozens inspectors knocking at your doors, and starting from, first of all, your whole house tax would increase, because then you'd be charged at commercial rate of house tax. Your electricity rate would be doubled, because then you'd be charged with the commercial rate. And because of that, people tend to work under the carpet. They want to evade capture. They would not like to register. So what is the solution? The solution is that we, below a threshold, say people employing less than 2 or 3 people, or who are largely self-employed, below a turnover range of say 50,000, 1 lakh rupees per month. So I mean, we have to create some kind of a threshold below which, zoning laws and electricity rates and house tax rates will not be considered as commercial, and people would be allowed unhindered from home. So these are some reforms that are pending. It is there, I think, on the table of different governments, but that need to be pushed if we want to do that.
Thank you. And Nitish, finally, I managed to come to you. Basically, what I wanted to ask, and what is the points have been very well buttressed by Mr. Garg, Mr. Bhardwaj, as well as by Sundeep, is the fact that these 8.5 crore really micro enterprises, you and even Mastercard, right? You really need to reach them. And like Rajeev was saying, that you get rid of the cost of hardware. You do that, using SaaS applications and SaaS platforms, so that somebody can just have a device, a mobile device that can connect to an application on the cloud and use. But because of this absence of this data, right, on these really micro entrepreneurs, and these are entrepreneurs that you will need access to also for your own business, you must be facing a lot of challenges. So tell us a little bit, while we have been listening to the SMB side and the issues that SMBs face, what about the issues that fintech companies like you face, right? What are the challenges that you face? Because there is this absence of data. You probably need to create your own data. I mean, you're technologically savvy, so you can generate a lot of data, from places. But tell us a little bit about challenges that you face in lending, and doing business with SMBs that can be addressed.
See, I think first of all, the resistance to digitization has been discussed in this panel. That resistance has been broken down. Wherever small businesses see value, they will digitize. We've seen that in Uber. We've seen that in UPI and QR codes, and that they're willing to digitize, and it may not require them to invest, because a lot of digitization options really are free of cost. So to actually get into this thing, you don't have to invest in infrastructure, even if you get into a POS terminal. I think from a lending point of view, a few challenges, right? One was mentioned earlier, that the alignment of banks and fintechs on how they want to look at credit. Are they willing to rely on the data that is available with fintechs? There are very few banks who have completely got convinced that that's what they want to do, right? And have got processes where they can actually rely on the data which is being made available by the fintechs. And so I think, you can keep continuing to make bilateral, arrangements, or you actually create, as has been discussed in the panel, something which is policies which are macro in nature. And I will give the example of Oken. The whole idea behind Oken is to create standardized APIs through which data can move from borrower to lender, and then formalize the roles of different participants in the lending value chain, which is, it could be a loan service provider like a fintech. It could be an account aggregator who's moving consented data from the customer to the lender, or it could be a technology service provider as well. And so is what it's trying to do. It's trying to bridge the gap between in data, technology, as well as capital and distribution. And I think there has to be a way that we adopt those standards so that these arrangements don't remain bilateral, because if we keep doing this in an iterative way, I think the confidence takes a long time to build. I think that is a very macro point, which is something that we'll all realize that, and that's the reason I said, could Oken become the UPI, parallel for credit, and the whole idea is to standardize how information moves in a consented way. I think the other issue that is clearly there is that while we talk about digitization, I think one of the gaps we feel is on the KYC process itself. I think that when it comes to small businesses, these are generally single store, single owner, and so they're almost operating like individuals. Now, if a fintech has already done the KYC of that business, when a bank steps in to give a loan, that KYC has to happen all over again. And there has to be a way that that banks and fintechs can exchange KYC, obviously with consent, because the merchant is already, or the business is already KYC'd. When we talk about CKYC, I think the total relevance of CKYC is not to the full extent, like many other things, right? But there should at least be a sharing of KYC. When that happens, that process can become very largely digital. And I think the third piece is that, the real recognition that small businesses need short-term capital, that a lot of banks would like to, because cost of acquisition is higher, so ROI considerations, they would like to get into longer tenure loans. And when you're actually dealing with flow-based credit, you're looking at literally 15 days, 45 days, 60 days kind of credit. um, and there are, for example, we are working on a solution where, if let's say the business is trading with Pine Labs at 1,000 rupees per day accepting payments, we know that that is the trend. Is there a way that we can extend 15 times of that 1,000 rupees to the business, so the business gets basically 15,000 rupees of credit, because we know the risk on that business? And we would like that the banks should partner and understand how that whole credit process does work. So yes, my view is that there are challenges, because I think if we do bilaterals and it takes time for confidence to build, that is clearly a challenge.
Right. I'll take a question to both Kalpana and Sundeep, whoever wants to go first. Strategically, how can fintech companies increase their reach to small businesses? Kalpana?
I think from a strategy perspective, you probably need to look at which market first you want to capture. So like, Mr. Garg was mentioning, whether do you want to go to the micro, enterprise, or do you want to go maybe, to another set of customers? So I think first looking at what is the customer segment becomes the first strategy from a fintech perspective. I think the next thing would be to look at saying, what value am I going to add and what pain am I releasing from that specific segment, right? So for example, if you look at, say, M1 Exchange, they're actually looking at how can I make visibility in such a way, and I'm managing credit risk in a much smarter manner, and enabling this set of segment of SMB to operate faster and achieve their financial goals and their financing capabilities faster. So I think it's important to look at which space, whether it is credit, payment, it's looking at maybe, maybe enabling them from a point of view of even just looking at banking processes and looking at becoming a bridge between banking process and this. I think Mr. Garg has a point here.
Not really on this, but if you finish, then I would actually like to take up what Mr. Anil was saying earlier. The issue about treating business as a commercial entity and then sort of putting different rates of electricity, different taxation structure and all is a very genuine thing. It's a legacy of past. Even on fundamental principles, we would never understand why electricity to business is costlier than electricity to residential. The productive use of electricity is costlier than unproductive use of electricity, so to say. Likewise, the issue which came up about the GST vouchers not or invoices not being opened, I think this again is a legacy of our old mindset. Airports were not allowed to have, you can't take pictures.
Yeah.
Private industry was not allowed to make maps. Very recently, the government has allowed private industry to do the mapping. I think these two big issues, if the FISME can take it actually much more powerfully with the government, and I think you would find receptivity at the level of Prime Minister and other and the Finance Minister. Number one, do away with the distinction between the commercial use or residential use of the property. You can conduct very well, very easily permitted. And in fact, working from home was not a permissible activity until this COVID happened. And then the government revised the notification to make working from home legal. Likewise, for the businesses, for the small businesses working from their homes, etc., manufacturing is a different thing. You don't do it. There may be some pollution, other issues involved, so you can push that out. But non-hazardous manufacturing or the services can very easily. Likewise, I think it's time to come to open up. And this mindset to be changed, that the entire GST database is opened up for the private industry to do the digitalization. I think these need to be taken up very powerfully. This will enormously help the digital or fintech industry to go ahead. Thank you.
Sure, Mr. Garg. I'll come to Sundeep. Yes, while we talk about how SMEs, MSMEs can traverse this entire complicated path, which involves regulations and legislations, I want to check with you how what are the strategies that a fintech company like yours can adopt to reach out to a larger number of small businesses?
Yeah, so actually, Kalpana has covered most of the point very well. I'm just going to augment that by one small point, which is we have personally experienced. Is that every fintech should ensure that they are ring fencing defaults on their platform, because you scale up very fast, but if the default happens, then the confidence of the financiers, lenders on the platform suddenly tanks, and these are all unsecured lending. So then the whole market starts reacting to it in a specific way. And then to bring back that confidence, you have to double work whatever you've done so far. So grow fast, but you have to protect yourself as much as possible. You have to build algorithms and so nicely, and you have to predict that you do not create a massive default. That is very important. So when ILFS crisis happened in India, that was the first time that trades faced in India the cash crunch, and we learned the hard way. But it prepared us for 2020 Corona. So in a way, you can say we faced the trailer in 2019, and we actually prepared ourselves for 2020. And that is something that everyone should be very careful about.
In fact, the trailer that you saw in 19 and which helped in 2020, hopefully that will help us in 2021, because 21 looks to is giving us the shivers right now in terms of turning out to be worse than 2020, right? Hopefully we'll be able to handle that. But also, of course, Sundeep, you're right in terms of defaults, because we've also been hearing about certain defaults happening on trades platforms, right? And that is a worry, because ultimately the invoice discounting is based on the reputation of the buyer, right? Not the seller, which is an SME, like Mr. Garg was saying, that ultimately it is about, you're shifting the risk to the large corporate. And if the large corporate defaults, then how do you handle a system like trades?
So Alokesh, in 2019, when ILFS crisis happened, the book size of the trades overall was very small, and the default was 1.5%. In 2020, when Corona came in, the book size was triple of what was 2019, and the default is 0.2%. So that, like I said, 2019 prepared us for 2020, and we could sail it very nicely. And therefore, post-Corona, the bank's confidence is so high that it has grown twice or thrice post-Corona, actually.
Okay. So, both Mr. Bhardwaj and Kalpana have raised hands, but you'll have to just wait a couple of minutes, because I had a question for Rajeev. And basically, Rajeev, what I wanted to ask you was, we have seen this so many fintech models emerging, right? Lending models. There's a lot of innovation happening. Companies like, M1 Exchange and Pine Labs and the others that you mentioned, Razorpay and others, fantastic companies with lots of great innovative models. Mastercard itself is a very, very innovative company which comes up with lots of innovative products and all. What are in your mind, what are the really, fintech lending models of the future in terms of scale, right? What are the models that you think might work? Are there any new models you see that are emerging?
Thanks, Alokesh. we're building a bunch of future-proof kind of lending solutions, and we're not stopping at just lending. We also are overlaying all our solutions with value-added services. Now, for instance, the soft pause or the tap on phone solution that we launched in India last year is the first in the world, allows the merchant on his own phone to accept cards, link-based payments, QR, capture cash transactions, set up his own shop online with the same phone, take pictures and make an online store. And on top of that, we overlaid it with a partner solution called Zoho, who's got over 45 solutions cutting across a GST, inventory management, and whatnot that any business would require. So on top of that, one of the things that we strongly feel is alternate scoring mechanisms, whether it is in India or elsewhere. Now, the scores that credit scores that we have in India are typically 2 or 3. And on top of that, with our partners, especially for MSMEs who are coming into digital fold for the first time, we'll establish a track record and hopefully we'll be able to secure credit from lenders. What we're looking at doing is to expand that scope and bring in more alternate credit methods or scores which lenders can look at. One of them is a telecom-based score. This is primarily linked to the MSME's primary phone or phones, which this partner of ours will look at and give you a score which is completely different from any other score that a lender would look at. So we are looking at building that and continue to expand that to make sure that any MSME who gets into the digital fold is promised potential loans and value-added services at very attractive interest rates.
Right. While we discuss future models and future innovation from FinTech, Kalpana and Mr. Bhardwaj, you had raised your hands. Yes, Kalpana, to you first.
Right. So I was just responding with Sundeep to say that I think one of the things that can also help FinTechs is looking at how regulation can maybe assist with some of the risk, but not put so much of maybe, tons of processes like banking. So I'm not sure if anyone else has a view on what is the role of regulation in terms of maybe speeding customer service, say for FinTech. Yes, there needs to be checks and balances, and like, the whole point of having FinTech support a larger banking system is for the speed, right? Like you have a Porsche car, you can't say don't drive it fast. I think the brake is the important thing. So, I was just curious whether Nitish or Sundeep had a view on how maybe regulation can support some of this, because while you have some draconian processes, I'm not sure if there are some best practices. You see Ant Financials now, getting slam dunked in China, but of course, that's for a different reason. But I'm just saying, so I don't know what thoughts are about how regulation can curtail some of those risks for the FinTechs, basically.
I'll go to Mr. Bhardwaj before maybe Nitish or Sundeep or both of you could answer Kalpana's question. Mr. Bhardwaj.
Well, my comment is with regards to the penetration. Now that it is obvious that in all MSME segments, FinTech can reduce friction, bring down cost, enhance predictability, trust, etc. by use of the data footprints. So the question is how to increase penetration in this segment. So many of our members who are FinTech companies, so they have cited certain stumbling blocks. I shared with them 3 of them. One is, it's obvious that there is more than enough information part in the databases that we had mentioned, whether it is GST, Udyam, etc. But there is the issue of interoperability of these databases and harmonization of legal compliances in view of the multiple laws. We need to identify them and get them addressed. Second is, the SEBI and RBI sandbox access procedures should be made simple and accessible. Currently, they're kept secret and hidden as they currently are. So I think that needs to be opened up and for more public debate and clarity, and should be shared with people who are currently in the ground and facing difficulties. And third is with regard to the data protection policies. See, these silos are there because of they are ruled and governed by different data policies, data protection policies. So a white paper is needed, which identifies and addresses many of these concerns of these databases. And post localization, I think it has become even more important. Thank you.
Right. Rajeev, you want to weigh in?
Yeah, just to continue the point that I was trying to make. While we're doing all these things, what we believe, especially in a country like India, where we have a very large MSME ecosystem to solve for, investments are absolutely necessary. And in that regard, we at Mastercard last year, looking at the devastation that a lot of MSMEs faced, we have allocated 250 crores over next 5 years to support MSMEs, and within that, women entrepreneurs within the MSMEs. Very clear focus to make sure that women entrepreneurs across the country get the needed support.
Fantastic. Nitish and Sundeep, you just want to take on the question that Kalpana had posed?
Yeah, I think that my sense is that fintech should really understand their core competencies. First of all, it's a very important thing to make the distinction between what you do very well versus what you might want to do to improve your prospects, right? It's not generally the same thing. And so, I believe from a regulatory perspective also, the risk of over leverage is a real one. And Sandeep did mention that, you got the responsibility to keep the confidence of, financial system, because once you go wrong, then it's very difficult to get that confidence back, right? So I think that at least our view is that you got to build the experience and do what you do very well. And our view is that our job is to go in and digitize the merchant first, bring the infrastructure to the merchant at the most appropriate and economical cost, digitize their store, and then basically add value added services, one of which is going to be credit. Okay, and make it very contextual. uh, but when you do that, our view is that you got to partner with the people who bring the capital in, because you could say that you've got the expertise to bring distribution and the ability to bring a lot of rich data which is very contextual to the lending process, but bringing capital to that journey is a very different model altogether, right? And a lot of fintechs, what they do is that just because they want to control the end to end, right, they bring in capital. And also what happens, that cost of capital is pretty high. So when you look at cost of capital and when you factor in the defaults and all of that, ultimately you're lending at 27-28%, right? And so I think that you got that responsibility and you got to play to your strengths rather than try to do everything.
Sundeep?
So, Kalpana, yes, we've learned by working in a regulated environment. I am born in a regulated environment as M1 Exchange, and many times you kind of go Ori and say, why is regulator not relaxing it? Why is he putting so many ring fences around you and not let you do free things? However, now when I have seen so many Southeast Asian countries, China and other countries, and even in the UAE, Gulf countries, India is far better in the fintech space. It is because of the regulator. We do not have crisis situations like other countries, though we are having fast fintech growth, is because of the regulator. So it's a double-edged sword. Having said that, like we said, safeguarding the ecosystem is equally important. So which the regulator plays a very important role in India, and that is one of the keys for our success in India.
Okay, thank you. And thanks, Nitish, for that. I think you're saying just focus on your expertise and don't kind of try to do everything. I think that was great advice. Thank you.
Okay, I think with that, we've completely run out of time. It's been a great discussion today. So thank you to all of you for taking the time out and joining us. Before we let you go, I'll just sum up the great discussion that we've had. It's going to be very difficult to sum it up, but I'll still take a stab at it. I was just listing out before the session began today, the troubles that are facing MSMEs. It's a very long list. It began perhaps in 2016 with the demonetization. That was a formal announcement of the start of problems. The problems had started before. Then came GST 2017, IL&FS, then COVID, and now a resurgence in COVID. But perhaps the only silver lining is the acceleration of technology. As all of you discussed, this acceleration without COVID would have taken at least a decade. Let's be honest about that in India. But COVID has ensured that it happens in a matter of a year. And while the resurgence of COVID, is going to be painful, and that's perhaps an understatement as far as the MSME sector in India is concerned. But again, the solutions that all of you suggested, be it the future models of fintech models that Sundeep, Nitish, Rajeev, all of you suggested, or the suggestions that Mr. Garg and Mr. Bhardwaj made about how to, easen up the spiral regulations that we have and the quagmire of legislations that we have. It's going to be very interesting for all the audience who are listening in. So thank you very much, and thank you to Mastercard for allowing this to happen. Alokesh, over to you.
Thank you, Suchetana, for summing up so brilliantly, and thank you to all the panelists. Mr. Garg, special privilege for us to have you with us. Thank you so very much for giving us time. Mr. Bhardwaj, eloquent as always, and you have so much depth of understanding of MSMEs. It's always a pleasure listening to you. Kalpana, some great, thoughts and, insights from you. Really love to listen to you. Rajeev, Nitish, Sundeep, fantastic ideas, and I hope, you lead the way for fintechs going forward. Special thanks to Rajeev and his team at Mastercard for allowing this opportunity to the Economic Times. And thank you all very much for coming today. Thank you to the entire audience who has come in and listened to us so patiently. See you all soon. Stay safe.
Thank you.
Thank you very much.
Thank you. Bye.
All of you, thank you.